This is the Value Investor Podcast with Tracey Reineck. All things value, all the time.
Welcome back, value investors. So there's some interesting things happening in the value stocks right now, and one of them involves the large cap drug stocks. Remember them? We've talked about them over the years, off and on. Usually Pfizer, Merck, those two in particular have shown up in various value screens we've run, especially even the classic value screen. And some of the ones where they were cheap but paying dividends, it would show up in there. But they always kind of had a trappiness to them. So we've avoided them, but so has everyone else on the stock market, at least up through the pandemic. And then we had a surge in some of the companies because of the COVID vaccine, and they were making a lot of money off of that. But then that petered out. And then we had the weight loss drugs. So some of them had huge surges, doubling, tripling off of the weight loss drugs, but that has calmed down as well. And those stocks have fallen back and petered out as well. So many of these remain cheap, and now they seem to be on the move again. So I thought we'd take a look to see if maybe there's something I'm missing. Maybe the earnings have turned around. Are they really value stocks, or are they really still traps in some capacity? Now, I just wanted to focus on the large cap drug stocks. These are the bread and butters that all of us know well. It's Pfizer, it's Merck, it's ABBV, it's Eli Lilly, and Novo Nordisk. Those are the five I chose. How did I find these? Well, I knew I was going to talk about Pfizer. We've talked about them many times on this podcast. So I put them into the search bar to see what's going on with their industry. They are in the industry is large cap pharma, not surprising. And so I wanted to just find its competitors, even though I knew what those were because we have talked about them. Everybody knows what these are for the most part, but still it's nice to see the list right there. So we did get 11 stocks that are in large cap pharma now, and it includes all the ones I just mentioned, plus some others that we all know, like Novartis, Johnson & Johnson, Roche Holding, Bayer. I'm just going to list them all out, I guess. Innoviva. I'm not as familiar with that one. And then Sanofi is the final. So these are all, global companies on the big cap side. And right now, the large cap pharmaceutical industry is in the top 16% of the Zacks industry rank. That's pretty high. That's in, top 20 we're talking, but top 16 usually would indicate that something good is going on with some of those earnings estimates. It ranks 38 out of 244 industries that we rank. Year to date, though, the industry, so that's all the stocks that I just mentioned in there, total return is up 2.7%. That's it year to date. And the S&P 500 is up 14.7. So very big underperformance, which is why we as value investors are interested in it, right? We're taking a look. Over the 1 year, they're down 12.7, while the S&P 500 is up 17.4. And then it lags 3 years and 5 years. Over the 5 years, which does include the pandemic and the weight loss drugs, it is up 66% versus 109% now on the S&P 500. So it has been a big laggard, but again, this is what we look for as value investors and why a lot of these stocks kept appearing in our value screens over the years. But I thought it was time now to look again and see what is going on with the earnings. The earnings did soar for the companies with the weight loss drugs, but they got very expensive. They weren't value stocks. So where do we stand now with a company like Eli Lilly or Novo Nordisk? And then Some of the others, Merck has really lagged. Pfizer has been terrible over the last 25 years. It's lagged the S&P 500 over that entire time. Now, you did get a large dividend in recent years with Pfizer because they had to pay us something to stick around, right? But even then, it still is an underperformer. And then there's ABBV, which I own in Zach's Value Investor portfolio. We bought it in 2019. I also own it in my own personal portfolio. It was definitely cheap in 2019. Its big blockbuster drug Humira was coming off patent in 2023. So everybody was getting out of it and panicking in 2019 because it was unclear how they were going to replace all that revenue. But they have managed. And so now the stock is breaking out to new highs, but is it cheap anymore? What's going on with AbbVie? It does not have any weight loss drugs, actually. And then Eli Lilly, I actually own in Zach's Insider Trader. We bought it only a couple of weeks ago when an insider obviously was buying the shares there before all the recent news. And some of that includes the Trump RX plan that would have the government bypassing the distributors, basically. And Eli Lilly has already announced it's making big investments in the U.S. to manufacture some of its drugs here. That was a couple months ago. So it's likely not going to be in the tariff category, but who knows? Tariffs can change at a moment's notice, but for now, that is why Eli Lilly is getting a bit of a boost now too. Now, that being said, I'm taking a look at these because they're all in the news, but they're having the biggest run, several day runs this week to start October that they've had in months or maybe even years in some cases with a few of these, but they have been cheap overall as a group. So as an industry, their PE now is at 14.4. So that is in the value category. I look for 15 and under. Average PEG ratio is at 1.6. That's cheap. It's not quite at classic value, but under 2 is still cheap. Price to sales, a little more elevated, 4.1 there. An average dividend yield is 2.1% now with the whole group. Some pay more, some pay less. So let's dive right in and just take a look at some of these stocks. I'm kind of going in blind because I wanted to be surprised as well, along with you guys, about what is going on with these companies, whether or not they are traps or values. So we're just going to go through 5 of them. Like I said, I'm going to start with Pfizer, ticker PFE. And remember, what is the difference between a value and a trap? Value, we look at those detailed earnings estimates. Well, one, it has to be cheap. On a PE, price to sales, PEG, something in the fundamentals has to tell me it's cheap. And then we will look at what's happening with those earnings estimates. Are they on the rise? Are they supposed to make more money next year? Are the analysts starting to get a little bullish on this group of stocks? So let's take a look. Let's dive in. Let's start with Pfizer. Okay, Pfizer is a number 3. It is an A for value on the style scores. So it has a forward PE of 8.1 and a PEG ratio of 0.8. So both of those are very cheap and already are telling me that it definitely meets the value and it's got that A for the style scores. Now, its dividend is still yielding the big amount. So this is what Pfizer has been doing to get people, investors to stick around. They are paying $1.72, which is yielding 6.8% right now. So that is impressive, but is it really impressive if you're really underperforming the S&P 500? Not always. That can be a sign of the trappiness, but we do have the cheap valuations here. Shares are trading near the 5-year lows right now. So that's why you've got the cheapness, but people have really just abandoned Pfizer at this point. So let's take a look. Sales expected to be up 0.3% this year and down 1.4% next year. Earnings expected to be up about 1% this year to $3.14. They made $3.11 last year. And then next year, $3.10. They made or expect to make $3.14 this year. So that's a decline of 1.2%. Not that big a deal, but basically these earnings are somewhat flat. Now, again, they're paying a dividend of $1.72 and expected to make $3.14. So they are clearing that dividend. And so likely they're going to keep paying that out to keep people around. So this is cheap, but is this a trap? I don't like it that for now there's basically no growth for next year. So I'm not really sure, even though we're getting a couple of days of the shares surging, what will really be the catalyst, for the next 12 months. Not much. And so I feel like this has a bit of a trappiness to it. So yes, it is cheap. It is on valuations. It is a value stock. It always has been since we've been doing this podcast, but it still has a bit of the trappiness. And I know we can do better in this industry. So that's Pfizer PFE. So let's take a look at Merck. What's going on there? MRK, M as in Mary, R as in Robert, K as in Kathy, is the ticker. This one too, trading near the 5-year lows. And so is it cheap? Let's see. It's a number 3, A for value again. So it's indicating it might be cheap. PE is 9.4. So yes, we have a cheap PE again. PEG 0.86. So yes, we have a classic value PEG. But what is going on? Well, let's talk about the dividend. Dividend $3.24, yielding 3.86. So almost 4% on the dividend. That's pretty juicy too, just like Pfizer. But is it a trap? So we know it's a value. We have sales up 1.2% for this year, 5.3% for 2026. So I'm liking that. Looking forward, we're in the fourth quarter now of 2025, so we are looking for 2026. 2025 earnings up 16.7% to $8.93 from $7.65. I'm liking that. We have one estimate higher, one lower in the last 60 days. Otherwise, everybody's doing nothing for 2025. 2026, another bout of earnings growth, 7.4% for 2026 to $9.59. So I do like this. This is not a trap. It is showing earnings growth for not only this year, but into next year. There are two estimates that were down in the last 60 days for 2026, but they're just bringing it down a little bit. So I said it was $9.59 is the new consensus, and that's just down from $9.61. So it's just 2 cents. Some analysts getting a little bit more in line with what the company is, maybe their outlook already for next year, or just based on being a little too optimistic maybe. But that's still 7.4%. So I do like this. It is cheap, and it's not really a trap here. But the shares kind of been stuck in this range. You do get nearly a 4% dividend for your troubles. I'm not as familiar with Merck's underlying business. What are their big areas? I know that they are not as big in the weight loss side, but still, they've got some growth going on there, and we're going to find out the end of October our earnings. So tune in there, but this one looks like a true value. So that's Merck, MRK. Let's turn to ABBV now, busting out to new highs. So that's a little bit different than what we've seen with the other two that were at 5-year lows. ABBV going the other direction, even without the weight loss drugs. So it too is a number 3, and it's got the C for value. So what does that mean? How expensive is it? Let's see. Let's see. Forward PE, yes, much more expensive, 19.3. PE is 19.3. PEG, not too bad, 1.35. I'm not hating that. With that higher PE, must mean some decent earnings growth is going on with ABBV. Let's talk about the dividend first. $6.56 a share, yielding 2.8% now. And prior to the Humira coming off patent, like in 2019, it was yielding like 5 or 6%. They too were doing a Pfizer. They were paying people to stick with them while they got some new products and hopefully could recreate what was going on with Humira, their blockbuster drug, which obviously did come off patent. They have been losing money on that to the generics, but they have been able to replace a lot of that revenue. So revenue growth for 2025 expected to be up 7.6%. And then 9.6 for next year. These are pretty good numbers. Earnings, 18.7% earnings growth for 25 to $12.02 from $10.12 last year. So that's a nice double-digit earnings jump. And then another double digits for 26 to 14.4 or $14.41. Remember, it was $12.02 for this year, and that's another 19.9% or just about 20% earnings growth expected for next year. So this is not a trap. We are still getting further earnings growth for next year, but is it a value? I would say it's a little stretched. Let's look at some other value things that we could look at. So price to sales is at 7. That's not cheap. And then price to book, it doesn't have one for some reason. And then again, PEG ratio of 1.4. So you're really counting on that earnings growth. If you're going off the PEG ratio, this isn't super stretched here for double-digit earnings growth. You get a dividend 2.8% yield. We're still owning it in the value investor, and I have been telling people to buy it. It's got some very nice drugs now. It also, a couple of years ago, bought Allergan, which owns Botox. That has been a decent performer for them. And it was good during the pandemic. Everybody was doing Botox to look good on Instagram. But AI is kind of interfering in that a little bit because you can put up like your AI face now on Instagram. Yeah, I know. But still, it has some other really good drugs that are performing really well right now. So the analysts very bullish on AbbVie. The street is too. It's busting out to new highs. So not dirt cheap by any means, but if you are a growth investor looking on the cheaper side, but not completely value, AbbVie would be the one for you. And on any pullbacks, you might want to look to be adding on any kind of pullback. So that's AbbVie, ticker A as in Adam, B as in boy, B as in boy, V as in Victor. And the chart is basically signaling that something good is finally happening at AbbVie now. Okay, let's switch to those weight loss drug companies. Eli Lilly, ticker L as in Larry, L as in Larry Y. It's number 3. It's got a C for value as well, just like AbbVie. So what does that mean? Well, let's look at the dividend first. We have $6 a share. But because the shares are up so much on the weight loss mania, it's yielding just 0.8%. So the shares are trading over $800 a share now, once again. And so then that's why the $6 sounds like a lot, but it's only yielding 0.8. What about the PE? So this one really took off when the weight loss drugs did in 2023. And it just got way too expensive. I want to say at one point it was like 60 or 70 times forward earnings. Well, it's come down off of its all-time highs and earnings are still looking good. So the PE has come down a bit, but it is stretched. even if you're a value investor. PE is at 33.1 now, but the PEG ratio is just at 1.07. And remember, a PEG of 1 or less means it has both growth and value. So it's very close to being both things. It is somewhat rare to get both things, but how could I have a PEG ratio that low with a forward PE of 33? It must be growing those earnings at a quick pace. And indeed it is. So for 2025, earnings expected to be up 77.3%. So it's still crushing it. Weight loss drugs are still popular, and its other drugs doing well. This is earnings of $23.03, up from $12.99 last year. So amazing earnings growth. 2026 at $30.95, up 34.4% again for 2026. This is, again, a growth stock now, but it is doing it. It is doing it, and it's a growth stock that now trades with a PE of 33. Is that cheap enough for you as a growth investor? It's not usually for us value investors, so I would probably still be on the sidelines with this one. But for growth investors, that's not that big of a PE for many growth investors. Sales expected to be up 37.2% this year and another 19.5% for next year. So very nice sales growth as well. You get a little bit of a dividend. Stock really sold off to start August. It has rebounded quite a bit, and now it's up again on some of this news about Trump RX, and maybe some people just thinking, hey, this is oversold now, given that kind of growth trajectory. And the weight loss drugs, and now they're going to be in a pill form. That looks to be working with several of these companies rolling out pills, will have even a bigger audience, because what would you rather do the shot or do the pill? I know what I would do. So it looks like it's going to be a big driver for earnings going forward. So I still like Eli Lilly, just not so much on a value side of things. But if you're looking for that growth stock, it is not a trap here. We still have the great earnings growth, and analysts are still bullish on Eli Lilly for both this year and next year. But it is a matter of what you're paying for this kind of growth. And it's not too bad. 33 times, PEG of 1.07. So that's Eli Lilly, ticker LLY. No value, but not a trap either. And then we're going to wrap it up with Novo Nordisk. This stock did sell off quite a bit. And this is on the weight loss drug, but also diabetes. It's one of the biggest drug makers in the world on the diabetes side. And ticker is N as in Nancy, V as in Victor, O, NVO for Novo Nordisk. And it is a number 3. So all of these were number 3s, but it's a B for value on the style score. So what does that mean? Could be cheaper here. Dividend, 82 cents. And that is yielding 1.48%, or we'll just round up 1.5. Not super high, not terrible though. I'll take a 1.5 extra, a little bit of cash coming my way. But on the PE side, this is why it's a B for the value style score. The forward PE is just 14.6. That is under 15, which gives it an actual value PE. PEG is a little bit higher than what we've seen in some of the others, though, at 2.1 for the PEG ratio. So that would indicate to me that earnings are not doing what Eli Lilly earnings are doing. And let's take a look and see. So 2025, 16.1% earnings growth to 381 from 328. And then 2026, another 7.1% earnings growth to 408. So this is a lot more muted than what we've seen with Eli Lilly. Also on the sales side, nice sales growth of 16% for this year, but only 4.6% expected for next year. This stock has struggled a bit more than Eli Lilly over the last year or so, but the analysts kind of all over. We have some raises to estimates in the last 30 days for this year and next, and some cuts. So they're just basically kind of getting in line. Nothing has really changed all that much. A few cents here and there for both this year and next year. But analysts trying to get a handle on what's going on with Novo Nordisk. But since it doesn't have the amount of growth of Eli Lilly, or is not expected to, this is when you've got to get it a lot cheaper. Is this a value? Yes. Is this a trap? No, because we still do have the earnings growth for next year, and the analysts are still pretty bullish on both this year and next year, but it's not as good of growth. So I would like to get it a bit cheaper. What has the shares done? Let's look at what all of these have done in year to date to get an idea. Is this one? Let me see if this one is trading. It's not at 5-year lows, but has had a huge pullback from 2024. I've been watching this one for a while to see, if it could get cheap enough. And in early July, it looks like it maybe is bottomed for this cycle, but hard to know for sure. This is just, it's hard to buy the drug companies. Things are always going on in trials. They may or may not, even if they get through phase 2 and then into phase 3, it still may fail or just not be quite as successful. That's why I do have to salute ABBV for getting several new drugs through the whole process and then rolling them out and having them be successful sellers into 2023 after Humira's, off patent, because that's not easy at all. And some of these, are kind of showing why it's difficult to maintain that kind of earnings growth. Okay, so just looking year to date, the best performer is ABBV, up 35.8%. And as I mentioned, it is busting out to new all-time highs now because that earnings and sales outlook looks good. And the shares, while not dirt cheap, are not extremely overextended at all. They're not trading at 33 times like Eli Lilly, but Lilly now only up 7% year to date. It's basically been going nowhere for most of the year. Pfizer's just up 2.7%. That's going nowhere. Merck is actually down 8.96 or 9%, basically. Merck is down year to date. Novo Nordisk, the worst performer, down 32.5. But I would still have Novo Nordisk on my watch list because while it's off the recent lows, not a lot, but it is off. Let's see the 3-month. No, still down 14%. It's only in the last month that a lot of these have had a big move. AbbVie up 16.1 in the last month. Lilly up 14. Pfizer now up 9.6. Merck up 6.2. And even Novo Nordisk up 3.7. But Novo Nordisk still has earnings growth expected. It's just lower than some of the others. And so you, as a value investor, will want to get it even cheaper. Is it cheap here? Not particularly. It has some value components. It's got that PE under 15, but it's not dirt cheap for what this earnings is looking like and even what the shares are doing. So on Novo Nordisk, I would maybe be on the sidelines and waiting for another pullback, honestly, maybe in the next earnings report. We'll see what happens there. But I get greedy on some of these when an industry has weakened a bit. Then I like to get things dirt cheap while everybody's hating on them, right? but nobody hates anything as much as Pfizer. And some of the others, nobody hates at all. Eli Lilly, could it bust out again on these great earnings and sales numbers? That's a possibility. And AbbVie is already busting out. So it's really Merck. Merck is just kind of in that trading range as well. And Pfizer trying to find its footing, even among value investors, not having as much luck. Just taking a look at the 1 year. So that will go back into 2024. And Novo Nordisk down 49% over the 1 year now. Merck down 21%. Eli Lilly down 5.9%. Pfizer down 4.6%. AbbVie, the only one, surging up 23.8%. Maybe it pays not to be in the weight loss drugs. You wouldn't have thought that a couple of years ago when it was busting out. There's been two areas in pharmaceuticals that are kind of among the holy grails. Well, there's really a couple more than these two, but in the wellness categories, it's been the weight loss, finding some kind of weight loss drug, which has now occurred, and it's hair loss. If they can find, there are some treatments, but if they can find something that works like the weight loss drugs for hair loss, that would be a huge blockbuster drug for whoever could do it. So we have found the weight loss, but still some of these stocks are struggling a bit because even when you have a product and you roll it out, it is about execution. And there's still some questions about that side of things. And now with the pill versus the shot form, and even just a lot of competition on the side of the weight loss drugs. So not as big a moat on the weight loss drug side anymore. So where do we stand? So Pfizer is a trap. Merck is a value. AbbVie is a value, not a trap, but it's a little stretched. It's not as cheap as the others. Eli Lilly is not a trap, but not really a value right here. If you're a growth investor and you're looking for something that's not super crazy PEs or PEG ratios, Eli Lilly looks like a great play for growth investors looking for some value. And then Novo Nordisk, it's a value, not a trap, but I'd like to get it cheaper. So we're going to watch these into the end of the year. Let me recap the tickers again. We had Pfizer, PFE, Merck, MRK, AbbVie, ABBV, Eli Lilly, LLY, Novo Nordisk, NVO. I own AbbVie in my own personal portfolio and Zacks Value Investor. I own Lilly in the Insider Trader service here at Zacks, and that's the only ones I own or any of my portfolios own. So as always, be sure to subscribe to get all of the Value Investor podcasts. There is value out there, believe it or not, even with the S&P and the other indexes hitting new highs. We're finding it in these kind of hated industries right now in large cap drug stocks. But also, as we know, energy, even in the banks, are still cheap, especially the regionals and the small cap banks. There's some other areas too. We're starting to get some value in retail, but that looks a little dicey here with the tariff issues still out there. But there's a lot of value. So I'm going to be covering quite a bit as we head into the end of the year. We're going to get another earnings season coming, and we will see what the outlook is starting to look like for 2026. Yes, we're already moving into next year, but don't despair, value investors. There's a lot going on, and even if you've been in AbbVie for the last couple of years, you've done pretty well, even in a non-AI or growth stock. So hang in out there, because I've got your back, and I will see you again next week with some more value stocks.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.